Friends, today's video is going to be very serious because I'm going to talk about gold and silver. Are you seeing gold and silver prices skyrocket? But remember the candle from 2 days ago? There was a huge doji. I'll tell you why that doji formed. If you have a friend who lives outside of India, ask them if they are able to purchase gold or silver using their credit or their debit card. In fact, are they able to purchase cryptocurrency? If they are unable to buy it and there's some technical glitch, let me tell you, this is a conspiracy by the banks. It's not a glitch at all. You are being intentionally prevented from doing so. Major attacks are currently happening within the silver market because holding physical silver has become the most significant necessity in today's world. And banks have placed their bets holding short positions in silver. What is happening in the silver market right now, in technical terms, is known as a short squeeze. This short squeeze is exactly like what we witnessed with GameStop's stock, remember? A YouTuber was behind it, wasn't they? Please tell me their name in the comments section below. But first, let's understand what exactly Chase Bank, Wells Fargo, and Bank of America did on the 26th and 27th of the month. The category code MCC 598 for precious metals and MCC 62111 for crypto exchanges has been blocked. Now, as a result of this blocking, people's transactions are failing. You see, Chase Bank updated its internal fraud rules on January 24th. Any transaction exceeding $500, specifically those under MCC 594 or 5944, which are designated for jewelry transactions, began to be automatically declined. An international bank, Wells Fargo, took this even further. They went ahead and blocked all bullion purchases regardless of the amount, even if it was as little as $10. They simply started declining them. Banks claim they're doing this for fraud protection, but in reality, they simply want to control your capital. They absolutely don't want you to move away from your fiat currencies like rupees or dollars and transition into what is considered real wealth. And what exactly constitutes real wealth? It's gold and silver. Robert Kiyosaki has been emphatically urging everyone to invest in gold and silver. But what's happening now is a complete panic atmosphere has set in. Look, it's the banks themselves who are panicking at this moment, and you must understand they are trapped in a short squeeze. Now, understand that banks aren't just blocking these transactions without any reason. There are very significant financial reasons behind this. I will explain those reasons to you. For that, you'll need to understand the Federal Reserve's H41 report. Look, according to the report from the Federal Reserve, the usage of the reverse repo facility has fallen to $89 billion. This is the lowest level recorded since March of 2021. Now, it's quite possible that you might not have fully grasped what I'm trying to say. So let me try my best to explain this to you clearly. Look, previously, a substantial amount, about $2.5 trillion, was parked right here. However, now roughly $2 to $4 trillion have already moved out of this entire system. This money, which has now reached $2.4 trillion, is not being parked in traditional bonds and stocks, but instead is flowing into hard assets such as gold, silver, and Bitcoin. Banks are observing that their liquidity is rapidly diminishing. People are simply not depositing their money with banks anymore. Before, they were investing in bonds and stocks. Now they're putting it into gold and silver. So people taking their money out to buy silver means banks' balance sheets are directly losing cash. And that's why they're locking the exit gates. Another thing is, the banks have taken up short positions. Now, if silver moves up even slightly, then the banks are really bleeding. And that's why they are halting these transactions, saying no more, no more. Because there's a real possibility that these banks could go bankrupt. This is not happening for the first time. History repeats itself. I'm taking you to Executive Order 1602 of 1933. President Roosevelt had made the ownership of gold illegal because people, out of fear of bank failures, had started shifting their assets into gold. In 1971, when the Nixon shock occurred, as foreign governments began demanding gold in exchange for their dollars, Nixon then closed the gold window and effectively made the dollar a pure fiat currency. What's happening in 2025-26? Now in 2025-26, remove the government. Instead of government, banking algorithms are now being employed. And these are being used to stop you, to tell you, hey, don't buy gold and silver. And observe, the government in India also imposes a 3% GST precisely so that you won't purchase gold or silver. Now just look at the kind of attack that's currently happening on the silver market. This is an attack, a margin hike. Now, what's most important is what happened on January 27th, not here in India. Now, pay close attention. The international silver price reached 170.73 per ounce, and then in just 4 hours, it crashed down to 103. This doji type candle you're observing, that's what we call a gravestone doji. Look, to these $14 that were returned to you, this was not a natural occurrence by any means. This was, in fact, a coordinated attack designed specifically to get all of you liquidated. You need to understand this clearly. What happened? A margin hike occurred. The CME group significantly raised the margin requirement for silver futures by 47%. It went from $22,000 straight to $32,500 per contract. So what was the ultimate outcome of this? Traders who couldn't provide that exact cash right away, they had to sell off. They had to liquidate. What could they do? Now, look, as a result, the price just fell straight. People got liquidated. People are getting liquidated even here in India because look, margin requirements are being increased within MCX as well. Now, if these margins continue to be raised this way, banks feel the same thing will happen that occurred in the 1980s. What exactly happened in the 1980s? Margin trading itself had been stopped. So when the government came and banned margin trading, the price of silver crashed and banks, they wanted to crash. Now let me tell you, for banks like JP Morgan, this is a very old game. Whenever they get caught short in a position, they try to destroy retail traders by raising margins. And that's exactly what's happening right now. But you must understand one crucial difference. If you grasp that distinction, you will surely triumph over these banks. That difference, my friend, is that there's a huge gap between what's shown on paper and actual physical silver. So listen very carefully. The paper price is a complete deception. The great divorce has begun in today's world. On the screen, you see 111, 120. Whatever price you're seeing, let me give you an example. If you are seeing a price of $111, then in Japan, the price was $130. And in Kuwait, it was $116. Why is there a difference? You need to understand this. In the vaults of COMEX, the US exchange, silver is running out very quickly. Now, there's a significant shortage of physical silver. Go ask your jeweler right now. It will take a long time for you to get silver. Within just 1 week in January of 2026, 33.45 million ounces of silver have been withdrawn. China has declared silver a strategic dual-use metal and they've placed restrictions on its exports. This is something you all are aware of. Now just look, after imposing those restrictions, they themselves, believe it or not, imported 30,000 tons of silver in the year 2024. And now they fully understand that, my friends, silver is absolutely essential for their manufacturing processes. There is no silver, and let me also tell you, even Tesla isn't able to get silver. You're asking why silver is soaring. I will explain it to you. Look at the demand for silver. Just imagine, Tesla has orders for vehicles. People have already paid advances. They are obligated to deliver these vehicles. They will require silver at any cost. They'll procure silver as it's essential for EVs. A major corporation has secured a government project for solar panels. Now, silver is indispensable for these solar panels, but there's simply no physical silver available. Since physical silver is simply not available, people are willing to purchase it at any cost. And that's why you're seeing silver prices skyrocketing. Now observe that the demand for silver is significantly higher than the supply coming from the mines. Banks know that if silver crosses $150, $200, their paper system will collapse. Their banks will collapse. In 2008, Lehman Brothers also collapsed and the stock market crashed. What do you need to do now? Look, I'm going to tell you that you should invest in physical silver or in bank silver gold ETFs. You'll say, no, at this current price. But my friend, if you don't possess gold or silver today, your portfolio is bleeding, even a small amount. If you had started investing, you would have accumulated a significant amount of wealth by now. In fact, you should really check this out. Tell your friends, especially those living outside of India, to attempt purchasing a small amount of silver, gold, or crypto. If it gets blocked, then you'll understand that this time the banks are truly in deep trouble. Alright, one very important thing, do not sell on margin. Margin requirements will be hiked, they most certainly will be. The paper market will be significantly shaken up, you will clearly see the price starting to come down. But the intrinsic value of silver in the physical market is absolutely not diminishing, and history bears witness to this fact. Whenever banks get trapped in this manner, a short squeeze inevitably follows. However, there's also one crucial point to remember, as I had previously explained in one of my videos, that whenever a parabolic rally takes place, you must be prepared for a significant correction. It's not as if the market will continue to move relentlessly in just one direction. A market correction is always a possibility. Now, if you're looking to trade in gold and silver, in fact 24/7, meaning even on Saturdays and Sundays when the market is closed, you'd still be able to trade. In fact, you could even get funding. So how is that possible? I'll explain it to you. Now, if you want to trade in gold and silver, you can do it on Binance. Binance is the world's largest crypto trading exchange. Here, you are able to trade in both futures and options. What's important now? If you type XIU here, you will be able to trade in gold. Now, firstly, you get leverage here. And secondly, this market is open 24/7. The second thing, Here, you not only receive funding but also provide it. It depends on whether you've taken a long or short position. Therefore, you should keep tracking the funding rate here as it constantly changes. Let me show you an example now. The funding rate for silver has dropped to 0. Now this is also something quite new, alright? So if you were to type in silver exact, it would show up as 00. This essentially means that whether you're buying or shorting, no funding will be deducted, nor will you receive any. But if, for example, I were to go to XAU here, this means if you short gold from here, additional money will be credited to your account, and if you go long, it will be deducted. So this is the concept of funding. Another thing is that you can also do copy trading on Binance. Let me tell you a bit about copy trading. If you click on copy trading, you can copy the world's top traders. You can see right here how huge people's profits are and what their 30-day ROI is. For example, here 68%, 40%, 24%. These are the ROIs of these individuals. You can copy them. In fact, you can even come here and search for my name.